Okay, good evening and welcome to today's short webinar just to show you how to get more pips and profit from using an auto trader. This time we're going to be looking at the PipCollector. So this particular strategy we're going to be looking at today is going to be applicable to the PipCollector, or if there is anything else like it out there, but obviously, very much applicable to the PipCollector. Now, even as you can see on the screen, we have, the MT4 on. We have Aussie New Zealand dollar on the 1 hour time frame. The PipCollector is best traded on the 1 hour time frame, but obviously you can trade it on any other time frame. Once you have understood and perhaps mastered it to some extent. But for now, I would recommend that, if you're starting up with a PipCollector, you start off using it on the 1 hour time frame. It can be used for trading a lot of different assets, basically meaning not just currencies, but also, stocks and even to some extent, the currency, the assets, the cryptos that are not very volatile. So we're just going to be going through it quickly today. Obviously, this time looking at currency pairs. Now, okay, we do have the Aussie New Zealand dollar here. We're just basically using this. It could be any other pair, that we could use. But let's just start off with this. Later on, hopefully, we could use other pairs as well, or have a look at other pairs. What you have here, basically you have the green and the red candles, like those of you who are used to indicators or perhaps, various auto traders, you will know that the green arrow is for a buy or giving you a signal for a buy. Or if you like, in this case, being an auto trader, the point at which, an alert, an entry is made or a trade is taken for you. The red obviously is for a sell. Now, to use the PipCollector, what I am going to be explaining today is obviously to speak of the entries and additional entries which you could take. So when you see this signal, obviously you wouldn't be seeing these arrows on your own. You would not be seeing these arrows on your own screen. What you'll be seeing will be different. You'll be seeing some smaller arrow, which will be green and red as well, closer to the candle as opposed to being far away from the candle. But you would definitely know when the trade was entered. But obviously, myself being the vendor, as it were, I have this additional candle to help identify when the trade was entered. In this case, if you were to draw a vertical line, from this red candle, you can see it lines up with this. Well, with this arrow, you can see it lines up with this red candle. Now, this is basically the trigger candle. This is not exactly where it entered. This is a trigger candle. The point at which it entered would be the next candle. So let's just take this off for now. So if the trade was triggered, if the entry was, I suppose I could call it, a trigger candle, and the next candle is the entry. So if this was for a buy, it means when this red candle opened here, it came all the way down and went back up and closed here. This point is where the trade was entered, or this point is where the trade will be entered. Let me just also add a horizontal line. So as it relates to this is where the trade will be entered for a sell. And as you can see here, it did go up at some point, but it went down. And even as I advise with the PipCollector, at least, if you're using it for the first time, I would a 10 pip scalp, either, if it's a buy or a sell. If you were to go on your settings I would say to go for a 10 pip scalp. Okay, so basically this is where the entry would be. And as you know, with all indicators and auto traders, you would not win every trade. You will win some and lose some, but ideally, to be profitable, you will have to win a lot more, or at least get a lot more pips, to be profitable. So that is basically how the pip collector will take trades for you. Now, the additional trades which you could take, let's focus on the additional trades which you could take even as it relates to the pip collector when using the pip collector. The pip collector obviously is at least 5.0 has been programmed to enter the trade much earlier than previous versions of the pip collector. So if this was the trigger candle and the entry was here, if you wanted to take an additional trade, as opposed to entering it here again for the second time, you will go a bit higher up for a sell. So you could decide to enter at the very highest point of that candle, the entry candle, which is the green one here, and decide to write it down perhaps for another 15 pips, another 10 pips or 15 pips. Mind you, the trade that will be entered for you, even as I advise for brand new users, would be 10 pips. If you decide to take another trade, you could then place it at the tip here, at the highest point there. Well, depending on the size of the candle, I'll be going through a couple of scenarios. This candle being quite a small candle compared to some other candles, as you can see here. I mean, at this point, obviously, you would not have seen these candles on the right-hand side. So what you'll be going with, or what you'll be having as a reference point, will be the candles on the left. And you can see this particular candle. All right, let's go with the second one instead. You can see this particular candle is the candle, the trigger candle. So what you do, I beg your pardon, would be to place another trade at the beginning of the trigger candle. Because this candle just opened, it will still be forming, so you won't know how high it will go. So you could place it at the top of the previous candle, or anywhere, higher than where it opened. So if this is where it entered the trade, let's draw another line. We'll make that a different color. Let's make that blue. So, okay, we'll make this red for a sell. So if this is where it entered this trade, being red, you place your second entry at the top of the previous candle, which was a trigger candle. Now, because you've set your pip collector, to the 1 hour time frame, if there is any trade that will be taken for you, it will happen within the first few minutes of the hour. So if it's 9 o'clock, it will come in anytime between 9 o'clock and 2 minutes past 9, because it's the 1 hour time frame. If it was the 4 hour time frame, it will come at the beginning of every 4 hours. If it's the 30-minute time frame, it will come at the beginning of every 30 minutes. That's if the setup is right, because as you know very well, if you've been using this for some time, a trade will not be given to you, or a trade will not be entered for you every single hour, at least not on some currency pairs. If you have 10 currency pairs there, not every single currency pair would give you a trade every hour. Some would and some would not. So assuming we are on the Aussie New Zealand dollar currency pair here as we are now, if the trade triggers on the top of the hour, this is basically where to enter. You basically will place your second trade here. You don't have to, but if you want more pips and profit, and a higher probability of winning with the PipCollector. So assuming you entered here and the trade eventually went against you and you lost it, you could lose that one and win the second one. So from here where it entered to here, for instance, is 10 pips. Now, so if this trade was to go against you by 10 pips or 15 pips, that would be okay, because, well, that would not be okay, because if your stop loss is 15 pips, it means you'll be taken out. You'll be closed out with a loss. But because there's a second trade here, you could then place your stop loss 15 pips away from the second entry as well. So let's say that's 15. Let's go 15 pips. Let's just say, let's move this here, for instance. Let's see if that's 15 pips. That's about 17 pips. So let's just assume this is where you entered the second trade and your stop loss was here at 16 pips. Let's just go with 16 pips. So basically, if you lost the first one, which the PipCollector took for you automatically, there is every possibility that you will win the second one. So that, in a nutshell, is how you get more pips and profit with a PipCollector. And I'm just trying to see if I can get an example of a losing trade, for instance. I mean, obviously, this was a winning trade, so, in a sense, I don't know if you quite get that. So let me look for an example of a losing trade, a trade that went against us. Let's just look for a trade that went against us. So we'll have a perfect example. Okay, so if this one entered here, okay, I suppose this is a good example. Let's just go with this. Now, this was the trigger candle, but this was the entry. So here's where we entered the trade. So as opposed to going down, the trade went up like 26 pips. So with the 15 pip stop loss, it means we were taken out of the trade. However, if we had entered the second trade, say at the top of the trigger candle, and had a 15 pip stop loss, let's just try and get the 15 pips from there. Okay, that's a 19 pip stop loss. That's a 17 pip stop loss. That's 14 pips. Okay, so that's 15 pips. That's 16 pips. Let's just leave it at 16 pips. So basically, if the trade was taken for you here, and it, instead of going down, it went up as it did here, you would have been taken out of that trade, but your second entry would have ensured that you basically won that trade. And you can see here, the second entry, being here, would have gone up, but come all the way down here with about 88 pips. So you can see that is a wow. Now, like I said, on one of our one of my Telegram postings, I said if you're trading with it for the first time, go with the 10 pip stop loss, the 10 pip take profit and 15 pip stop loss as one who's just using the 5.0 PipCollector. But once you have grown your account, well, that is if you have an account of £350 or dollars and below. But once you have grown your account, say to about £500 or dollars, then you can begin to trail your profits, because that obviously then means that if you had trailed the profits, you could have gotten as much as that. Let's see. Well, obviously, depending on your trailing stop and trailing step, you could have got as much as 88 pips from here, or even if it was 60 pips, you would have got as much as that. Now, I'm going to pause the video now just to take some questions or get some observations and comments from the guys on the webinar with me today. But before then, let me just see if there's anything else I would want to discuss with you quickly. Okay, now obviously, because I do trade myself, I'm not just a marketer. Because I do trade myself, I have an idea of trading. I have been exposed to trading for about 10 years and have been trading actively for 3. I mean, from this point, because of the pullback here and the long wick, it's obvious, there was some event here that, made this happen. During the course of our sessions, regular sessions, I will be talking about stop hunts as well, and how the market makers, try to, take a lot of us retail traders out of the market. But anyway, let me just pause the video now and take questions or hear comments from, those on the webinar with us today. Okay. Well, I mean, fine. I mean, I've heard the comments and all, and just to clarify certain things, because I mean, like I said, I've been saying for some time now, the new PipCollector 5.0 is programmed to enter the trades, a lot earlier. So you can see, with this one, it basically entered it close to the low or the demand zone. It entered it basically here, and you would have been able to ride it all the way up, getting over 60 pips. Now, the previous PipCollector perhaps would have entered the trade much later, but we have indeed worked on that. Now, just to tell you or show you how to actually, safeguard yourself from being stopped out. Even though I recommend, for those who are just starting out or those who have a small account, that they go with 15 pips, 15 pip stop loss. The best way to actually do it is to go for a bigger stop loss. That obviously would mean that you would have to take some risk, but at the end of the day, it's all going to work out a lot better. So if this is a call, is this for a call? If, for instance, this was a trigger candle and this is where the trade was entered, let's pick our green line here. So if the trade was entered there, the stop loss, if it was set to 15 pips, if it had come back against you like this one did, this would have come back 11 pips. Okay, fine, you would have gotten away with that. It would have carried on all up in your direction. But if it had come as far as this, let's say it came down here, that would have been 17 pips. It means you would have been taken out of the trade. Now, going with price action strategy, what is advised usually when it comes to where you place your stop loss or your take profit is usually where you have the last low or the last high. In that case, if this was where you entered the trade, you will place your stop loss. If you were to look left, you will place your stop loss below the last low. And if you were to place it here, for instance, obviously not exactly on it, because if the price was going to go down, most likely to come and it will come this far. So you want to give it some more room and place it slightly lower. So if you were to enter the trade here and you were to place your stop loss there, that would be a 39 pip stop loss, which really it's not bad, because if you were to do if you were to take 10 trades, you would most likely win at least 6 out of every 10. And being that if you are looking to trail your stop, it means you're going to be getting a lot more pips than you normally would. So the good thing is you can do this even on your mobile phone or your smartphone, whereby if a trade is entered for you, I mean, because it's set on the 1 hour time frame, what you obviously want to do is to check if you can anyway, depending on where you are, if you can, check your phone or your PC every hour to see if a trade has been entered. And if a trade has been entered, I mean, within the first 2 minutes on top of the hour, you would know if a trade has been entered for you, and you can quickly adjust your stop loss. You know, you can quickly bring it to the lower low. Now, this is if it was a buy, but in the case of a sell, this was the trigger candle. This candle was the trigger candle. So if the trade was entered for you here, well, I can see there was a jump. There was a gap up there. You can see there was a gap up. So if the trade was entered for you there, as opposed to having a 15 pip stop loss, which will be somewhere around here. Okay, this is 15 here. So as opposed to having a 15 pip stop loss, in this particular case, you would have been taken out, you would have been closed out at a loss. But if you were to have a stop loss placed on top of the highest high, that's the highest high. But obviously, you give it more room, like I said a while ago, you would have remained in the trade. and that would have been awesome, even without taking the second trade. I mean, this is the PipCollector entry. Even without taking the second trade, you would have been entered, you know, the market would have taken you that far, but it would have come back down, and you would have won, you know, over 80 pips like we saw a while ago. But guess what? Even if you had placed it just on top of the highest high, it would not have even gone that close. You would have still been in trade. But I would say always give yourself some wiggle room to remain in the trade. Now, if you had entered here where the trade was entered and you had a stop loss of 28, think about it. 28, 27 pips, even 30 pip stop loss is not really that bad. If you are going to be getting, like, I mean, think of this. This is 80 pips. Even if you got 70 pips, you know, and you had a stop loss of 30, that's a risk reward of about 1 to 2, which is very good. Which means for every 30 pip you would have lost, you gained twice as much. That is awesome. So that's the beautiful thing about this PipCollector. And as you can see again, the trade was entered for you at the beginning of the move. The trade was not entered here or here or here or anywhere else. It was entered for you at the beginning of the move downward. And you can see here, it was at the beginning of the move also. But this is something you're going to have to practice. You're going to have some faith and have some confidence in the some confidence or some faith in the PipCollector, and just trust the process and let it work for you. I would say, even if your first 2 trades are losses, do not panic, do not fret. Just let it, you know, work for you. And overall, I mean, this is one of the strategies I've traded for the last 3 years effectively. Obviously, that's why, you know, it is the way it is with the PipCollector. But I'll put this on hold again. I don't believe there's much more to say, but I'll pause the recording again and I'll come back later. Let me see if there are any more comments or questions. So that's basically, you know, the short video for looking at the PipCollector tonight, or well, today. You know, feel free to contact, you know, those who sent you to watch this video or those who have spoken to you about it, and, you know, be sure to sign up under them, get their links and sign up under them. Alternatively, if you found this, you know, somewhere else, feel free to contact myself directly, and I'll be able to plug into our Telegram group, Facebook group, and obviously other social media groups, so you could learn more and hear what others are saying and possibly sign up. Okay, have a nice time. Bye for now.